Scripts outnumbering solidly the advancing ones in yesterday's trade. Volumes were low. What cues will now Wall Street latch onto? Let's ask Ketul Sakpara, who joins in on the phone line from New York. Ketul, thanks very much for joining in. Hi, this is Bianca. Second quarter earnings, so far they've been mostly stronger than expected, but of course there have been the likes of Caterpillar as well last Friday, which was disappointed. What's your sense? Will earnings provide the much-needed respite?
Hey, good morning, Bianca. Yes, I think earnings have been better than expected for most of the companies out there. I think the statistics were that out of the companies that have reported so far, about 70% of the companies have beat analyst estimates. So on the earnings side, we are doing quite well. And this is, we are comparing our earnings to 2010 now, which was itself there was a sharp increase in earnings in 2010, so we are not starting from a low base, so we have to keep that in perspective. So on an earnings front, I think we are doing quite well, and I look forward to the same performance for the rest of the companies.
Ketul, sitting here in India, it's not really easy to gauge the sentiment that the debt talks are eliciting. How bad are traders' sentiments roiled by talks that clearly are headed nowhere?
Yes, that seems to be a major topic. However, we don't see any fear in the market or amongst the trading community right now as far as the U.S. default is concerned. The U.S. Treasury, the 10-year Treasury went from 3% to 2.95 in the last 1 week, which is what you would expect the reverse trend to happen if the markets were factoring in a U.S. default. So even though we are 4 days away from the August 2 deadline, the markets seem to be very confident that we will have some sort of conclusion before August 2. My understanding is that this political gamemanship will continue until there is some pressure from the market side, and this has to happen in the next 4 days or 5 days max, as in a drop in the S&P 500 of 1 to 2%, at which point the politicians will get into action, will leave their strong positions on both sides, and understand that this could be a big hit, economic hit. Just like Europe got into action when the Italian bond yields started rising quickly, I think the U.S. politicians probably require some sort of fire to come to the negotiating table. Right now, since the markets are not under fire or not indicating any chances of a default, the politicians are taking it quite lightly, and that is not the right approach.
Which is